Hello fellow investors and welcome to Borex Investing. This channel is all about clear research-driven analysis and practical investing strategies you can actually use. So lately I've been looking to invest in high-growth foreign companies listed on US exchanges, specifically the US Nasdaq, and there's a reason I've been doing this. With the US dollar weakening in 2025, companies that earn in foreign currencies and report in USD get a FX translation boost. Their revenues translate into more dollars, making them look better on paper. Also, buying foreign-based companies on US indexes is a great way to gain exposure to emerging markets without leaving the safety and stability of the Nasdaq ecosystem. So why Nasdaq? Well, it's just because I personally favor tech companies and I believe that they can grow and scale the fastest. So all that research brought me to Grab, ticker GRAB, which is one of the most fascinating super app companies I've come across. So in this video, I'll discuss who they are, we'll take a look at their financials, and I'll cover not only why I'm investing in them, but also how I am investing in this to maximize potential profits. So Grab is a founder-led company which started off as a ride-hailing app in Malaysia, but it's grown into something much bigger than that. Today, it's often called the WeChat of South Asia, and for good reason, as they are headquartered in Singapore and active in the entire region. So if you've never heard of WeChat, it's pretty much a Chinese super app with over 1 billion active users. So like WeChat in China, Grab is a super app, an all-in-one platform that people use multiple times a day. So inside one app, users can book rides, whether they're cars or motorbikes. They can message other users like a Messenger or WhatsApp. They can order food and groceries. They can send and receive money via GrabPay. And they can pay for things in stores using QR codes, kind of similar to Apple Pay. Grab also allows its users to manage financial services like microloans or even digital bank accounts. So it's really more like a daily utility app. Think of Uber, DoorDash, Venmo, Apple Pay, Messenger, and your bank account combined into one app. So Grab operates across 8 Southeast Asian countries: Singapore, Malaysia, Indonesia, the Philippines, Thailand, Vietnam, Cambodia, and Myanmar. And the area covers an addressable market of about 700 million people. And the scale is quite impressive. There's over 180 million users across the region, making it one of the most widely used apps in Southeast Asia. So Uber actually tried competing with Grab in 2018, but they ultimately failed and ended up selling their operations to Grab. So, right now this is the preferred ride app for Southeast Asia. But for millions of people, Grab isn't just an app. It's how they commute, eat, and pay. All right, let's take a quick look at Grab's latest financial performance. It's quite impressive. So I know there's a lot on the screen. Feel free to pause if you're a numbers guy and you want to read through, but I just wanted to highlight what was important for me. So in 2024, Grab generated $2.8 billion in revenue, and that was up nearly 19% from the previous year. So that's solid top-line growth for a company of this scale. Gross profit came in at $1.17 billion, growing over 36% year over year, as margins continue to improve across all segments. So gross profit came in at $1.17 billion, which is growth of over 36% year over year. And most importantly, they turned a corner on profitability. Their adjusted EBITDA hit $313 million, which was a major swing from a loss just 1 year ago. They also went cash flow positive, generating $852 million in operating cash flow and $136 million in free cash flow. So that's showing real financial discipline. So when we break it down by business line, their deliveries were up 14%, their mobility went up 20%, and their financial services surged 44% all in the last year. So their total platform activity, or GMV, reached $18.4 billion, and they're not slowing down. So for 2025, Grab expects revenues to grow another 19 to 22%, with profits rising even faster. So bottom line, Grab isn't just growing, it's scaling profitably, and that's what makes the stock so compelling right now. High growth companies are my favorite investments, and with interest rates falling in the next 1 to 2 years, it's going to be very beneficial for growing firms like Grab. The company does have Q2 earnings coming up on July 30th, so that likely will be a catalyst for a major price movement. It's important to note that Grab's isn't just a logistics company, as they made a bold tech play last year. This is kind of wild. In 2024, they paused all business as usual engineering for 9 full weeks. They stopped shipping new features and went all in on generative AI experiments. The estimated cost of this was $100 million in engineering time. But they did this to work closely with OpenAI and Anthropic, training models on their unique data sets. And they saw some very positive results. Initially, transcription for Singapore accents was only about 46% accurate, but now it's up to 89%. Grab processes 16,000 voice reports per day, giving LLMs real-world, multimodal data no other company has. According to their COO, very few people have so many multimodal use cases with so much data being generated. So this investment could give Grab a massive AI edge in both efficiency and user experience. So what's next for Grab? Well, they're not just riding the wave, they're actively expanding their ecosystem across Southeast Asia. And they're coming up on one of their biggest potential moves on the horizon. So Grab is reportedly in talks to acquire the ride-hailing and delivery operations of GoTo, its major competitor in Indonesia, in a deal valued at around $7 billion. So if that goes through, it would give Grab an even stronger grip on the largest and most competitive market in the region. All right, next up, electric vehicles. Grab has partnered with Chinese automaker BYD to roll out 50,000 EVs across Southeast Asia by 2040. So this is a long-term bet that aligns with ESG goals and local governments' push for cleaner transport. And on the fintech side, they're also scaling up fast. They recently launched GX Bank in Malaysia, and they're expanding digital payments, lending, and credit products across multiple countries. And let's not forget their AI strategy, one of the most aggressive in the region. They're rolling out real-time customer support, driver-facing tools, and even easier voice-to-text systems trained on the local dialects. So this, of course, is thanks to their very close partnerships with OpenAI and Anthropic. But the key takeaway is that these aren't just flashy tech moves. They're solving real regional problems, such as unreliable banking systems, congested transport, language complexity, and operational inefficiencies. So each of these initiatives really adds another layer to Grab's competitive moat, making it harder for others to catch up. So after researching the company, digging into their financials, and looking at where Grab is headed with their growth rates, I decided to invest in Grab. So I've had a very good 2025 year to date so far, and in the last 12 months, I have over 100% return. So I'm willing to take more risk. So instead of going the more traditional route and just flat out buying shares, I decided to invest in Grab via options. So I bought 20 call option contracts on Grab expiring on January 15th, 2027 with a $5.50 strike price. So that gives me exposure to 2,000 shares of Grab, and it also gives me over a year and a half for this thesis to play out. So let's talk upside. If Grab reaches $8 per share, I'm already in solid profit. If it hits $10 per share, then these returns start to get exciting. And if it ever trades at $20, which I believe is possible in a multi-year bull case, we're looking at a massive gain here of about $26,000. So why I chose options instead of shares? Well, first off, leverage. Instead of tying up $10K in equity, I paid $2,200 for controlled upside on 2,000 shares. And I have long-term conviction here. I believe in Grab's story. I like the way it's structured as a super app. I like their fintech and AI innovation. So with about 550 days until expiration of this contract, I've got plenty of time for the stock to grow and for the market to catch on. So to summarize, Grab is a fast-growing super app, and it's operating in a region with massive upside. They're making bold, high-risk, high-reward tech bets, and they're benefiting from currency tailwinds at the moment. Now, is Grab perfect? No. There's obviously competition, regulation, and macro risk involved with an investment here. But if you want exposure to emerging market growth and Nasdaq level transparency, Grab is one to watch. Especially with the US dollar in decline, this could amplify returns, especially when they report earnings on July 30th. All right, that's it for now. If you found this useful, please like and subscribe. And if you do plan on investing in Grab, let me know in the comments. Thank you. Until next time.